Now I discuss about how to prepare ledger accounts. So, you know, the accounting procedure first of all the business transactions we collected, those entered into a rough book. So that's why the accounting procedure, the first stage is collecting business transactions daily, day to day. So after collecting business transactions, then we prepared the first stage, and the primary book is general entries regarding small business concerns or small scale business concerns, subsidiary books regarding large scale business concerns. You know, small scale business concerns non corporate business concerns, large scale business concerns corporate business concerns. So that's why, as per accounting procedure, first of all, non-corporate business concerns, they should prepare journal entries from their business transactions. At the same way, large business concerns corporate business concerns, they should prepare subsidiary books from their business transactions. Now we discuss about small scale business concerns non-corporate business concerns. They should prepare journal entries from their business transactions. After that, they should prepare ledger. So first of all, what is the main objective of preparation of ledger? At the time of preparation of journal entries, each and every business concern, they should analyze and they should write the business transactions as date wise, particular wise, and amount wise only. But these journal entries should not provide a group of transactions related to a particular concept at one place. So once again I repeat, journal entries are not provide an information related to a particular group of transactions related to one concept at one place. So this is to be done through preparation of ledger accounts. So once again I repeated, at the time of preparation of journal entries from business transactions, we write all the business transactions as a journal entries, date wise, particular wise, and amount wise only. This should not provide a group of business transactions related to a particular concept to one place. That's why we should prepare ledger accounts. Then at the time of preparation of ledger accounts, we are able to enter a group of business transactions related to the one particular concept at one place. That is the primary objective of the preparation of ledger accounts. And what about other objectives? And other objectives are like that. So, to find closing balance related to each and every concept at the end of the particular month or period. So, second objective, the first objective is a group of business transactions related to related to a particular concept at one place. That is the first objective. Second objective is to find closing balances regarding each and every concept of the journal entries. Then the first journal entry, for example, the first journal entry, cash account attached to capital account. So in this first journal entry, there are two concepts are there. The first concept is cash account, second concept is capital account. So the second objective of the preparation of ledger account is to then we find out closing balances of each and every concept. Then we are able to find at the time of preparation of ledger accounts, we are able to find closing balances of the first concept related to cash account. At the same time, then we are able to find out the closing balance of related to second concept like capital account. At the same way, second entry purchase concept is there, cash concept is there, and cash sales. That's why at the time of preparation of ledger, then we are able to find the closing balances of each and every concept which are in the journal entries. That is the second objective. Then third objective is it facilitates to prepare of trial balance for the purpose of preparation of then financial statements or final accounts. Then the the next the next stage of the accounting process, business transaction, journal entries, ledger. After that, trial balance, and finally we prepare financial statements or final accounts. So that's why the third objective is it facilitate to preparation of trial balance for the purpose of preparation of financial statements or final accounts. Then the the main objective of preparation of accounts, that then we are preparation of financial statements or final accounts. Then for the purpose of preparation of financial statements, there is a need to trial balance. So for the purpose of preparation of final accounts or financial statements, there is a need to preparation of trial balance. So for preparation of trial balance, then ledger accounts is facilitated to preparation of trial balance. So that's why the third objective is then it facilitates to prepare of trial balance for the purpose of preparation of financial statements or final accounts. So for preparation of financial statements, there is a required of trial balance. The trial balance we should be prepared on the basis of ledger accounts. That is the third objective. So then how to preparation of ledger accounts? First of all, step by step. Then first, for the purpose of preparation of ledger accounts, first of all we prepare journal entries very carefully. First of all, for the purpose of preparation of ledger account, first we should prepare journal entries very carefully. If any mistake is committed into the journal entries, then ledger account is also committed mistakes. So that's why then we are very take care at the time of preparation of journal entries on the basis of our accounting concepts and conventions, and on the basis of our rules and regulations. Then the golden rules of accountancy: personal account, real account, nominal account, etc. So right. Next, then how to preparation of ledger accounts. Then first of all we quoted the numbers. Then how many concepts or how many ledgers are required for the preparation of then journal entries. How many ledgers we should be prepared on the basis of journal entries. First of all we quoted the numbers. So for example, then first journal entry, cash account debtor to capital account. In this, cash account is the first concept, capital is the second concept. At the same time, purchase cash, purchase first concept as per the second entry, cash is second concept, like that. So first of all we marked that how many ledgers we are to be then able to formed on the basis of journal entries. Then first of all cash account, then we are given first number, capital account given second number, purchase account third number, cash account we are not given any number because of this cash concept is then put into the number one, like that cash account. That's why we are not then we are not given the number for the fourth one. So at the same, cash account is entered into cash, the first number. Sales, then we are given 4. At the same time purchase, then already then we are given third number. This purchase concept is entered into at the fourth date, then in the purchase account. At the same time, Akil number for Akil account, then we are given 5, Bonu and Co 6. Then at the same time, Akil already given for Akil, then there is the number is 5. At the same time, cash already given, the first number, and the 28th general entry is cash account data to Bonu and Co account. Then cash account is given for first number, and Bonu and Co account are given for then sixth number. That's why then how many ledgers then we should be prepared, then because of then there is a given numbers are 6. That's why then we are planned for only 6 ledgers are we are able to prepare then on the basis of these journal entries. So that's why the first ledger account is the cash account, because of the first number is cash account. Then we should prepare cash account. Then how to prepare cash account? Then all accounts, then we are then there is a need to preparation of how many accounts? As per the journal entry, there is a need to prepare 6 accounts. The first account is cash account, then we are already drafted. Then the pro forma regarding the cash account. Then any ledger account, the pro forma is then there are 2 halves is there. This is first half, this is second half. Then we are written in middle the name of the account. What is the name of the account? Cash account. That's why the heading is given cash account. This is the first half is treated as debit. That's why we are coded DR. The second half may be treated as credit. Then debit, the columns is like date column, particulars column, JF number, general folio number, amount, date, particulars, JF number, amount. So that's why there are containing the debit side columns are same contains credit side. So how to posting the ledger? These journal entries we are entered into that particular account. The process then we should be called as ledger posting. What is the approach for ledger posting? How to post it the journal entries into the ledger, right? Then first of all the approach is like that. First of all we observing the journal entry. The entry is first date, cash account data to capital account. First of all you identified that which account we should be formed. Cash account now we formed. That's why then we concentrate cash account. Cash account is placed. Cash account is placed debit of the first entry. We should be entered this entry into the debit side. If cash account is placed credit, this entry is entered into the credit side. Once again I repeated for you. First of all, you identified which account now we prepare. First point, which account we prepare now? Cash account now prepare. Then second point is now I prepare cash account. That cash account is which placed, debit place or credit place. Then second point is we should be identified. Then now our account is cash account is placed at debit. That's why this entry is entered into the debit side. If it is placed at credit, this entry is created. So now cash account is debit. Then we entered this entry debit side. So cash account is debit, entered into debit side, but we write not the cash, the concept of cash, then we write opposite concept. Once again I repeated, cash account is placed at debit, we entered the debit side, but we write opposite concept. Opposite concept. What is opposite concept? Capital account is the opposite concept. That's why cash account is debited, Then we entered into debit side, but write capital account. The opposite concept is capital account. So this is capital account. Amount is 1 lakh. Amount is 1 lakh. So the word to is used if any transaction is right into the debit, then we use the word to. If any line we write into the credit, we use the word by. So again we repeated. Now we repeat about cash is debit. Then we should be entered into debit as a opposite concept like capital account. So cash is debit. Debit side to capital account, date and amount. Next, second entry. Cash is placed at credit. Cash is placed at credit. Then we should enter. This one is credit side. But concept like purchases account. So cash is created. We entered credit side. By purchase account, date and amount. So date is 4th, amount is 40,000. So cash is credit. We entered into credit side. By purchase account, date and amount is given. Next, seventh one, third entry. Cash account data to sales account. Then cash is placed at debit. That's why we entered into the debit side. Cash is debit. That's why we entered into the debit side as a opposite concept because of a to sales account. So seventh date, cash debit, debit side to sales account. So to sales account, date and amount is given. Next, purchase account data to Akil account. In this general entry, there is no cash concept. That's why this is no need to enter the cash account because of there is no cash concept is there in this entry. Next, Bono and co account data to sales account. So this entry is also no need to enter into cash account because of there is no cash concept in this entry. Next, Akil account data to cash account. Then cash account is there, but it is placed at credit. That's why we entered into credit side as by Akil account. Date is given and amount is given. Next, cash account data to Bono and co account. Cash account is placed at debit. That's why we debited to Bono and co account date and also 50,000. Now we completed ledger posting. So the process now we completed ledger posting. After completion of ledger posting, there is need to balance that ledger. There is a need to balance the ledger. How to balance the ledger? How to balance the ledger? Then first of all, we maintain totals like that. After total is maintained, after total is then ready. First of all, we added debit side amounts and credit side amounts. Then now I added debit side 1, 2, 3. The total is 2,20,000.